All right, welcome back, everybody. TCG TV. Today we have Dave Thurston with Crown Title talking about commercial real estate investing. So we have Dave Thurston with Crown Title. Dave, tell us a little about what you guys do here at Crown Title.
So we have basically three companies here. We have a title company, which is Crown Title Corporation, which is a national title company. And then we have a research company, Performance Abstractors, which researches real estate information in about 15 states in the Mid-Atlantic. And then I have a law practice, which does mostly real estate work and contract work. Within Crown Title, we have four divisions. We have our retail division, which is a division that services loan officers and realtors. We have our distressed assets, or REO division, default service division, REO division. And then we have our commercial division. And then we have a reverse mortgage division, which caters to loan officers that solely have expertise in reverse mortgages.
So we got a lot going on here.
A lot going on.
So today we're going to touch more on the commercial real estate portion. So I know Dave has multiple different kind of commercial real estate and residential real estate needs and clients that do a bunch of different types of things in the real estate world. But in regards to the real estate market as a whole and investing, commercial real estate investing, what are you kind of seeing in the marketplace right now?
Well, I think it was very strong until COVID hit in mid-March, and then I think that people become more cautious. And I don't know if that's a great strategy or not. I think people are worried about office space because of the work at home and how that will change our environment. But I see people being more cautious, extending due diligence periods, negotiating longer due diligence periods.
Yep.
So a little caution out there now.
Yeah, see, it depends on different asset types, but it's really just kind of some businesses are open, some are shut down, and some are rebounding well, some are going to be a longer rehab process. So it's really, it's tough right now for some of the investors to find out what businesses are in these buildings are going to survive, which ones aren't.
Sure.
We've seen a lot of the investors and developers saying, hey, we don't know what things to be trading for right now. We don't know what it's going to look like in 6 months, and they're just putting things on hold to see what happens with the market. So when you say people are kind of putting off or holding on to some cash right now, it's really hard to time the market is a very good point. What are you seeing in residential versus commercial? Are you guys still seeing strong numbers on residential side?
Residential's up 100% with our numbers.
In regards to closings?
With regard to closings and new orders, it's pacing probably to be our strongest year. And we were formed in 1992. I think this year will be probably our strongest year when it's all said and done. The liquidity that the government's put in the market has deflated the rates. Mm-hmm. Most lenders are now having trouble keeping up with demand. I would tell you that we are doing the best we can, but we are also having a little bit of trouble keeping up with demand. But we're doing well. I'm really proud of our employees.
Yeah, we've seen some crazy demand for buyers on the residential side with rates so low. Now rates have been pretty low on the commercial side too, but lenders have been very, very meticulous about which companies or which businesses they are lending to. So
well, I think the banks, I think the default officers in the banks and the senior executives are really trying to project what they believe their default ratio is going to be when all this settles down, and hopefully in 6 months or a year.
Yeah, and it's hard to predict because they don't know how people are going to rebound and how much the government's really going to either forgive some of these loans, especially the PPP, and all these different loans that are going out there now for PPP, and the other loans that were lent out on businesses that are shut down now.
Yeah, my gut, and you asked me the question a few minutes ago, my gut feeling is that the commercial property in established neighborhoods outside, locally, I'm just talking about the local market,
Mm-hmm.
your Catonsville, your Towson, White Marsh, Ellings and Mills, I think they're going to be fine. I think they're niche buildings. Mm-hmm. I worry a little bit about the business district in Baltimore City. Mm-hmm. Because the buildings are so large. Work at home is going to probably contract
Yeah.
a lot of what those tenants need. And then you have obviously the other issues going on with safety in Baltimore City. So I worry a little bit about the business district in Baltimore City and other cities.
And majority of those buildings down there are high sky rises where you can't really social distance yourselves, and there's so many of them down in the city. There's going to be a lot of supply with, I don't think, nearly as much demand as there was 6 months ago.
And it presents challenges about how to bring people back from work, right? Because we have 40 total employees here. We have, I think, around 32 or so working from home. We're able to take our 8 or 10 people that are here and test them, communicate with them very efficiently. But a larger companies, we're lucky in that we're not sharing this office building with them. So it's just us. If you're in a larger building, like to your point, Brody, downtown, you can maybe control your people, but you're still in the common areas, maybe with companies that don't have the same controls. So it's more of a risk. So I don't, there's some significant challenges with that.
Yeah, I think office space is really going to see the most kind of change in the marketplace, and not necessarily only the amount of what their kind of the market value is or market value of rents, but there's just going to be a lot of repurposing, I think, a lot of those spaces. And who knows, maybe they transform into some sort of apartment buildings or something along those lines, but there's going to be some repurposing buildings. And we've seen a lot of investors trying to just be on hold to see what the market holds in the next 6 months to a year, because there's a lot of kind of volatility right now.
Right.
So that's kind of what we're seeing on our end. So the commercial, I think the closings for actual sales have slowed down on our end, and some of the leasing, but I think there's definitely going to be opportunity that presents itself as, unfortunately, some of these businesses go out of business, or some of these properties are very highly leveraged.
Sure.
And with some of these banks going to start to, instead of being able to forgive these loans, they're going to start to have to come after some of these owners, unfortunately.
Right. There's opportunity in every market. I think as a business person or entrepreneur, you have to try to find it. So I think there'll be great opportunities in the next 6 months or a year.
Yeah. So fortunately, with tough times comes opportunity, and that's just kind of the way the market works. But the best investors, they find a way to make situations better for all people that kind of play all tenants. And so that's kind of what we see in the marketplace. Do you have any advice for developers out there that are looking to develop or invest in commercial real estate?
Well, I think obviously working with a experienced and qualified agent that's really specializes in commercial real estate is really step one. Second thing, to your point before we discussed it, timing the market's tough. If something fits your needs, you have low interest rates. If you think you have a good business model, I wouldn't try to wait it out.
Yeah.
I'd strike now, and just do your homework. Do your due diligence and work with qualified people.
Yeah. Yeah, you really kind of have to think about worst case scenario too. Right now, there's still every deal has risk. You know what I mean? You're not going to be able to alleviate risk, but just think about the worst case scenario. Put yourself in a position where things kind of hit the fan. You can still survive. You can still be able to handle that debt service. But there's definitely deals.
And I also think, Brody, that picking the right lending partner is going to be crucial down the road. Because to your point, some of these larger buildings, in these business districts are in trouble. If there are certain banks that are holding a lot of that paper, that balance sheet, the bank's balance sheet could get beat up, and they're going to have less of an appetite to loan.
Yeah.
So I think you really have to know, be on the street level, keep your eyes and ears open, and know which lenders have an appetite for the loans.
Yeah.
And you don't want to slow no.
Yeah. And there's banks that are starting to default, or they see the writing on the wall. There's some opportunity for some of these properties. Banks aren't in the business of holding properties.
Correct.
So that's where you can get some of your deals as well. We work with a lot of banks in their distressed asset department that I'm sure you guys are familiar with as well, being on the REO side.
Yeah.
That's kind of where you can find some of these deals where there's distressed properties and you need to have a new concept, a new use of properties. And that's where we see a lot of our deals, but just got to do your diligence still and make sure that it makes sense.
Correct.
But yeah, I'm sure you've seen that on your side, is that there's going to be writings on the wall. Maybe not right now with the banks kind of getting forgiven, not being able to evict or kind of collect on some of these these outstanding balances.
Yeah.
But
and I think that, I think because of the liquidity that the federal government's put in the system, we're not going to have, if you would have asked me in March, I would have said, well, May, June, and July are going to be hard.
Yeah.
But I think the hangover's coming.
Yeah.
I think they're kicking the can down the road, most likely because of the election. And I think the hangover's coming the first quarter of 2021. So.
And it's kind of a falsified, I'd say, market right now. The real estate market, the stock market, there's a lot of stimulus been pushed into the economy that's made it so that some of these businesses, some of these real estate properties are still able to stay afloat with some of the stimulus package going on.
Correct.
So as that maybe subsides and maybe that produces some opportunity, and maybe that's a place to kind of where you find this.
Well, and I think that, here locally, because we have large government contracting businesses, I think we are insulated some from the lows of the lows. I mean, I think, what I watch unemployment. I mean, I think in this crisis, if we can keep unemployment where it is, we're pretty resilient. I think our economy will make a step back. I do think, in my amateur, that the stock market's a little overpriced now, but it's hanging in there. So God bless.
Well, it's rebounded before. We've been through tough times, and it's always seemed to find a way to rebound itself. Same thing with the housing market. So it goes through dips and swings, but the U.S. economy is a pretty strong economy overall. So there may be opportunities come up, but we feel pretty confident there will be a rebound, in the future. So what's one thing COVID has taught you during all this craziness?
We have a motto at our business: we solve and protect, right? So what we really want to do is solve problems for our clients and protect, when they invest in real estate, protect their investment by insuring the title, giving them an owner's title insurance policy that insures their investment. And I think what I've learned the most is that my employees, who I had tremendous respect for and was very proud of before this, that has even gone to another level. I mean, we basically, had a conference call on Sunday night, mid-March, and said, as of tomorrow, no one could go in the office. And everyone got set up from home. Everyone got ready to go. And like I said, we kept 8 people in and 32 out, and they did great. Our service levels were still tremendous. They were very responsive to the clients. They adapted very quickly. So, I mean, to me, that's a microcosm of what we are as Americans, right? I mean, they were very resilient. They were solving problems. They were, knocking down barriers. And I do think that America's best days are ahead. I am always very positive about our people and about our intellect. Maybe not always about our politicians, but about our people. And I do think our best days are ahead. And I would just say I'm proud of our resiliency here at Crown.
Well, it's good because you guys have kind of shifted with the marketplace. So as you guys need to adapt, you guys have seemed to do so, especially with a lot of employees that are different facets of the business too.
Well, Winston Churchill once said, "If you're going through hell, keep going." Right? So it's not an option to stop. So that's our motto. We're going to keep going.
Well, hats off to you guys. So congrats on everything you guys are doing. You guys have seen a great last couple of months, especially on the residential side.
Yes.
So keep that up. We'll obviously see some commercial deals kind of come through more through the woodworks as this starts to clear up, hopefully, and maybe there's some opportunity for some investors and some developers out there. But I want to thank you again for coming on.
Oh, thank you.
So
good seeing you.
It's good to see you. So everybody, that's another episode of TCG TV. If you have any questions about any of the different services that Crown Title has, feel free to reach out to Dave. What's the best way to contact you, Dave?
They can contact me either by phone. This is 410-719-2210, or my email is very simple. It's dthurston@crowntitle.com.
And we'll leave his information below, so if you have any questions at all, feel free to reach out to him. But otherwise, thank you guys for watching. Talk to you soon.